If you're planning to retire by 2027, investing in a growth stock is definitely a good approach. Let's say you decide to invest in Tesla. Just how many shares would you need? Sure, Tesla's earnings are erratic, but it's hard to ignore that the company's growth earnings usually surpass expectations and have been higher than expected. In today's video, we'll be doing the math based on statistics and methods from experts, so keep watching to find out how much you'd need to retire on Tesla stock. The last 5 years before retirement may be the most crucial in terms of planning, since you must assess whether you can genuinely afford to stop working during that time. The amount of preparation done thus far, as well as the results of that preparation, will play a big role in the decision. Of the reasons many people struggle financially after retirement is due to failure to conduct a good retirement needs analysis. At its most basic level, a retirement needs study would be as simple as multiplying their current income by a recommended percentage, such as 75% or 80%. This is predicated on the premise that spending will likely decrease after retirement, which is hardly the case. In the United States, the 401k plan used to be the most popular type of employer-sponsored retirement plan, but recently, companies have been cutting back on proffering this benefit to employees through various means. You have the option of investing in one or more funds. The majority of the choices are mutual funds, which include index funds, large cap and small cap funds, overseas funds, real estate funds, and bond funds, among others. They frequently span the spectrum from aggressive growth funds to conservative income funds. One of the most common options for people seeking to build a robust retirement savings for themselves is to invest in aggressive growth stocks. Although volatile and risky, we believe the proceeds, when they pay off, certainly balance the risk involved. Investment in companies with above-average earnings growth is known as growth stock investing. These businesses have entered a phase of explosive growth in earnings and sales. This is where Tesla comes in. The stock is currently trading at about $1,000. For the purposes of this video, let's say it stays at $1,000 for the next 5 years. Highly unlikely as it's a growth stock, but stay with us. According to the most recent Consumer Expenditure Survey from the U.S. Bureau of Labor and Statistics, the average monthly expenses for American households costs $5,011, so that's almost $62,000 annually. According to the 4% rule, experts recommend saving 25 times your annual costs before retiring. So our annual $62,000 becomes about $1,500,000. So you'd need approximately 1,500 Tesla shares to retire in the next 5 years. However, when you factor in compound interest and growth rates, that number becomes even less, and your resultant amount in dollars increases. In the last decade, Tesla has seen an expansive high growth of its stock to over 1,000% since its inception. Arguably, it's the growth stock of the decade, and whilst skeptics believe the stock prices may have plateaued due to its many established auto competitors in the car manufacturing game, its history and present steps in the future indicate otherwise. Should Tesla's consistent and powerful EPS growth pattern continue, the stock might hit $2,500 or higher by the end of the decade. That's a 250% increase, which means you'd end up with about $3,750,000. Some market participants may argue that these stock price forecasts are overly optimistic. However, from the company's history and with the expert guidance of its CEO Elon Musk, the forecasts might be conservative. Tesla's first public offering took place on June 29, 2010. Tesla offered 13.3 million shares at a price of $17 per share on the Nasdaq. It raised a little over $226 million in all. Following its IPO in 2010, Tesla's stock price remained basically unchanged for several years. The company survived a near-death experience in 2008 when it was selling only one car, the original Roadster, in the run-up to the IPO and afterward. The business plan at this time was for Elon Musk and his team to keep the lights on long enough to roll out the Model S sedan, the company's first built-from-scratch car. In 2012, this finally happened. Tesla's stock price skyrocketed when the Model S was named Car of the Year by Motor Trend in 2013. If you bought Tesla stock soon after the IPO and kept on, you'd be looking at a return of 1,000% or more today. Tesla is a fantastic investment for the future. Regardless of how hazardous it is, they've prioritized safety and quality as part of their brand values, and we believe they'll succeed. Tesla concluded 2020 with $7.7 billion in cash on hand, with a projected net cash position of $24.6 billion by 2025. This is attributed by some of the most impressive improvements in sales, profitability, and cash flow of any company, not just automakers. Tesla also plans to boost its deliveries from 500K in 2020 to nearly 4 million by 2026, indicating a promising future. While this is still about 60% less than what automakers like Toyota and Volkswagen are expected to provide, it's a significant step forward. Meanwhile, bullish catalysts remain rampant. After the newly opened Berlin plant held a ceremony on March 22nd to commemorate its first deliveries, Tesla's stock price began to pick up again, and in less than 3 weeks, shares have risen dramatically, recouping the majority of the losses suffered in the first 10 weeks of the year. Tesla's sales are expected to increase even more now that it has 2 additional facilities up and operating. Tesla's Gigafactory in Austin, Texas was opened very recently, marking a significant step forward in the company's long-delayed aspirations to begin production of its electric Cybertruck. Elon Musk recently sat down with Chris Anderson, the head of TED, for an interview in which his passion and aspirations for the electric vehicle company shone. Anderson was also able to interview Elon Musk the day before the Giga Texas event, which he said he did in case Elon couldn't make it to the TED Talk. Anderson explained his experience at Giga Texas, pointing out that the machine that makes the machine was mind-blowing before releasing a quick preview of an 8-minute footage. Anderson directly stated, "What I witnessed there was really incredible." Elon Musk's famous machine that creates machines, and in his opinion, the key to a sustainable future, isn't just building an electric automobile. It's creating a system that can churn out a large number of electric cars while still earning a profit, allowing them to fund future expansion. Tesla's earnings and revenue are expected to be good in the first quarter of the fiscal year 2022, according to analysts. Tesla should reach a run rate of roughly 2 million cars by the end of December, according to Ives, though the full year total for 2022 won't meet that goal. Tesla sold 936,000 cars in 2021, with sales in the fourth quarter pushing the year-end run rate to about 1.2 million. Adjusted EPS is predicted to increase by 148.7% year over year, which is faster than the prior quarter but slower than the year before. Revenue growth is predicted to pick up to 72.8% year over year. Analysts predict adjusted EPS to raise 67.7% for the entire year of FY 2022, a substantial slowdown from the previous year's strong growth. According to New Street research analyst Pierre Ferragao, Tesla shares would go from a market capitalization of little over $1 trillion to $10 trillion by 2030. According to the analyst, Tesla's growth story is starting to take root, and the business is on course to reach unprecedented scale and capture 20% of the car market. Ferragao, on the other hand, stressed that his assessment is neither a forecast nor investment advice, leaving investors to make their own decisions. The analyst's forecasts for 2030 assumes 20 million vehicle sales and a $35,000 average selling price, resulting in $700 billion in vehicle sales. Insurance will likely contribute $1.5 billion. Full self-driving software will contribute $35 billion to $70 billion, and energy will contribute $250 billion, with true AI adding option value. Whatever the future holds for Tesla, things are looking up for the car company, which has managed to hold the world at its heels. Elon Musk revolutionized and has brought the company to where it is today. It's difficult to go wrong betting on one of the world's richest and smartest men who unarguably knows more about manufacturing than anyone alive today. Of course, all investments are a risk no matter how good the prospects sound, so the amount to actually invest depends on an individual's capacity and personal financial calculations. There is no one-size-fits-all number of Tesla shares to acquire to retire wealthy. It varies by background, salary, projected lifestyle, and other factors. If you were looking to retire in a few years, how much would you invest into Tesla based on your annual financial needs? Comment down below.